it's a distraction not because it's not important. It's a distraction not because it's not a tragedy, but we really need to put this into context globally. In the U.S. alone, you see 60,000 deaths from influenza just last year. Terrible, but this is capturing the market's attention globally. It's capturing folks here in Santa Fe, New Mexico, very far from the center of the outbreak. It's capturing their imagination and their concerns. But as you look forward, what is really going to be the global economic impact, and how do we price that into markets? That, for better or worse, is a big part of what we have to do as professionals.
No, that's true. And I agree with you on that front. I think a large part of the thinking in the United States is that, with influenza numbers being so high, that this may not be a clear and present danger for economic fundamentals just as yet, or not as grave as a danger just as yet. But to that thought process, do you think that from a trade angle perspective, what this does for manufacturing facilities in China, how that impacts the supply chains that then get routed back to the US, to Europe, that there would be an impact, an earnings impact coming in from there?
Actually, I think that is what investors need to keep the closest eye on. It's, again, not so much the impact of the virus itself, but rather the impact of the measures that are taken to prevent its spread. And what it really highlights, the trade challenges over the course of the last year, and now the virus impact on global supply chains, really highlights the interconnectedness of global markets. And I think it's something that we continually underestimate. And the long-term impact of that may not be so great in the context of an economic downturn. But the interconnectedness of those markets is something that, as investors and as market participants, we really need to keep an eye on. And the coronavirus is really highlighting that as a very important topic, as the trade deal and trade discussions did as well.
And Jason, based on your perception of the risks that are currently out there, how are you positioning your portfolio?
Sure. So as we look at the marketplace, look, we run a number of different portfolios for global investor base, surveying the total landscape of investable securities and putting it into various categories. You look at global rates and credit as very, very expensive, not very interesting, with a very asymmetric return. On the equity side, valuations globally are generally not tremendously attractive, but searching for cash flow generative, basic blocking and tackling companies is really what you need to do in order to ride out volatility that may be in the future. So we focus on cash flow, global dividend payers, a nice symmetric upside downside for investors to stay invested.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.